What is going on, traders? Welcome to Celestin Capital. And in this video, I'm going to teach you guys about imbalances. Now, just a quick disclaimer. Do not take anything I say in my videos as financial or investing advice. I'm simply showing you guys, teaching you guys my experience in the markets, and they should be taken and back tested rigorously before being applied to live trading. With that being said, let's go ahead and hop into this video. Now, here's a little theory about imbalances. So let's say there's a cargo ship. I don't know, not a cargo ship, but a train carrying cargo. You know how the trains have different cargo connected to each other. Let's say that one day the half of the cargo gets left behind. Half of the cargo gets detached on its way to whatever, New York or whatever, or its destination. Do you think the train is just going to leave it there? No. The train is not just going to leave the cargo there. What the train is going to do, the train is going to come back for the cargo, attach the cargo again, and continue to its destination. It would be wrong, it would be unlawful, I believe, for the train to just continue and leave the cargo detached. All right? It's the same case with the markets. It's the same case with imbalances. Now, here's a little drawing, a little sketch of what imbalances are in the market before I show you guys the live markets. So we have, let's say we have structure. Now, sometimes what would happen in the market is that price would create a gap, which can also be called imbalances, which I call imbalances. All right. Price would leave a gap within the market because, I don't know, something could have happened over the weekend. News could have happened and, price wasn't able to connect candles, whatever the case is. All right. Something happened within here that caused the market to gap and continue in whatever direction it was continuing in. Now, usually what the market likes to do, it doesn't always happen. What the market likes to do is the market likes to come back for the imbalance and fill in the imbalance because it's basically an empty hole left behind that the market is leaving behind. Now, there are trillions of dollars moving through the market on a daily basis. Within this little thing right here, this little gap right here, the banks, whatever the case is, may have been losing hundreds of millions or even billions of dollars within here just because they didn't account for this imbalance right here, because they didn't account for this gap right here. Now, in order for them to make up for that money, what are they going to do? They are going to push the market back down and tap into the imbalance to fill it in, to collect their rewards. Same case with a train. The train will go back to the detached half of the cargo, and it will pick it back up, it will detach it, and it will continue on to its destination. It's the same case, simple as that, all right? There's no complication to it. Let's not overcomplicate anything in the markets, all right? The psychological aspect is complicated enough. It's hard enough psychologically. I don't want to make the technicals as harder than it should be, all right? So that's the theory, the little theory behind imbalances. The market will leave certain gaps within the market because it wasn't able to fill it in at the moment. And what it would do from time to time is it will fill it in. It may not happen today, it may not happen tomorrow, but for the most part, price will go back and fill that imbalance in and either just continue or reverse in the opposite direction, whatever the case is. Now, I'm going to be showing you guys this in right here. All right, so we've got a beautiful example right here, actually. I was going to replay this, but there's actually a nice example. As you see, price was creating beautiful structure to the downside. Price was creating structure to the downside. As you see, price continued to break structure, and what was left behind? You can see, let me zoom in so you guys can see this clearly. You see how there's a huge gap from this candle to this candle? You see, look at every other candle. You see how there's no gap left behind? There's no imbalance. Every candle is connecting to each other. You see how they're all connected, they're being filled in. Look at this. There was a small gap here. The gap was filled in by this candle right here. Just understand, look at what I'm talking about. Look how everything is perfectly aligned. There's nothing left in the market. The market's filling in every single void within price. But in this case, look at this. So we went from here, from this candle, and we just dropped down. Boom. No hesitation, just a straight drop. And then this candle created this high right here. And what was left? This imbalance. Imbalance is basically a void in price. Simply all it is. This is the imbalance right here. In this case, we have the imbalance right over here. What I like to do is I like to take my little rectangle and do this for imbalance. I have a preset template. I just click imbalance. You can create it if you want. Yeah, I have imbalance, and let's see what price does. So this is the daily time frame. So this is 1 day right here. So this first day right here, price didn't come to fill it in. So this is 1 whole day, 2 whole days, 3 whole days. All right. As I told you, it might not be today, it might not be tomorrow, but at some point, price fills in the gap. This is 4 days, 5 days, 6 days, 7 days, 8, 9, 10, 11, 12, 13, 2 weeks. We are at 2 weeks. Well, for trading days, that's almost three weeks, because there's only 5 trading days within a week. So look when price finally comes back to fill in the imbalance. After about 3-4 weeks. That's a whole month. When I told you that price may not fill it in tomorrow, may not fill it in today, but eventually it will fill it in, I wasn't kidding. At some point, price is going to come back because it doesn't want to leave it behind. And this is a daily time frame, so the banks are probably down billions of dollars in this case. All right? They're probably down billions of dollars in this case. So they have to come back, collect their rewards, and then do whatever they want to do. They can continue to the upside or continue to the downside. All right? Look how it filled it in perfectly to the T. It filled in every single drop of the imbalance. So the imbalance was from here to here. Look, price filled it in completely. All right. So you play this out, and it continued to the downside. As you see, price was headed in one direction. It had to come back to fill in the imbalance, and it continued in that same direction. All right. Let's take a look at some more examples. And you can find imbalances on every single time frame. Every single time frame, you'll find imbalances. All right. So in this case, there was another imbalance right over here. And it doesn't always get filled in completely. But as long as they're able to collect as much money as they can, collect what they need to collect, all right, that's the important thing. They come back to collect what they need to collect, they're fine with that. And you see there's an imbalance right here that hasn't been filled up. So you can expect price at some point to come fill in this imbalance. And there's a lot of money left behind that price is leaving behind. There's a ship, there's a ton of cargo that the train has left behind. So at some point the train has to come back, grab the cargo, reattach it, and do what it wants to do. All right, because there's a cargo left behind. There's important supplies left behind within the cargo. So as you see, price broke below, created this imbalance, and it came back, filled in the imbalance nicely, and it continued on its way. Simple as that. Same case with this over here. There was another imbalance. And as I said, go and backtest this yourself. Don't listen. Don't take what I say as financial advice. Go backtest this yourself. Find the imbalances and see what price does at those imbalances. See if price goes back to fill it. See if price reverses from those imbalances. See if price continues in the direction. Just focus on price action within the imbalances and whether or not price decides to go back and fill in those imbalances. There's an imbalance right here. Price broke above. You see this huge wick. Price came and filled in this imbalance. Simple as that. All right, there's nothing more complicated to make it. Another imbalance right here. Price came to fill in. Look at all of these imbalances that price came back to fill in. There was an imbalance right here. And at some point, you'll get used to it so much where you'll start seeing imbalances, even on different time frames, without having to go to that time frame. You'll know that there's an imbalance there. You see there's an imbalance right here. Price filled it in completely, nicely, or almost completely. Another imbalance. And I'm not trying to make this complicated at all. It's literally not complicated. It's imbalances, all right? Imbalance right here. Price came back to fill in and just reversed from there. Came back, filled in these imbalances as well. And that's the end of the video, guys. Literally, go and backtest this yourself. Simple imbalances, but they are very powerful. They mean something. It's simple, but they mean something. They're very effective. if you can understand how to use them and apply them correctly to your strategy, they will be of important significance. All right. So, and I'm going to show you guys my NMLB strategy. This is the second setup that I have. So I have the MLBM and I have the NMLB setup. So I've got the MLBM setup, which I've shown you guys several times, but I haven't shown you guys the NMLB setup, which is the No Man Left Behind setup. And I'm going to show you guys that in the next video. I hope you guys are excited for it. I'll see you guys in the next one.